All right, let's jump right in. Today we're talking about India's financial system. Think of it as this massive engine that's really starting to rev up, but it's happening at a time when the global economic weather is, well, it's getting super complicated. So in this explainer, we're going to unpack exactly how India is handling its money and its markets in this totally new landscape.
And this quote, it really nails the core of the problem. You see, India is doing great, firing on all cylinders, right? But the global game has completely changed. It's like just having a strong economy doesn't mean you're guaranteed a smooth ride anymore, not by a long shot.
So that's the big question we're tackling today. In a world full of geopolitical drama and economic jitters, how is India's financial system? We're talking its banks, its markets, the whole shebang. How is it navigating these really turbulent waters? Let's dig in and find out.
Okay, so first things first, let's paint the picture. The world that India is dealing with right now, it's a much, much tougher playground than it used to be.
So what does that mean exactly? Well, for starters, geopolitical competition is just way more intense. Countries are making trade deals based on national security, not just what's good for business. On top of that, there's this constant risk of financial shocks hanging over everyone's head. And maybe the biggest thing, the major global powers, they just aren't coordinating the way they once did. So that's the backdrop. It's a pretty challenging one.
So, faced with all that, what does India's playbook look like? Well, the story here has been one of getting ahead of the curve, making some really decisive moves, and it all starts with the central bank.
Okay, so the first big play? Making money cheaper to borrow. Since February 2025, the Reserve Bank of India has been pretty aggressive, cutting its main interest rate, that's the repo rate, by a total of 125 basis points. Now, for those of us who don't speak central bank, that's a 1.25 percentage point cut. It's a really strong signal, basically a shot of adrenaline right into the economy's arm.
And this wasn't just a random move. The timing was key. See, inflation was starting to cool down, which gave the central bank the green light it needed. It was their window to pump more liquidity, more cash, into the system to keep that economic engine running smoothly and really push for growth.
But the real question is, did it actually work? And the answer is a pretty clear yes. Those rate cuts actually made their way through the system. We saw lending rates for new loans drop by 64 basis points. That means it got cheaper for real people and real businesses to borrow money. We're talking everyone from a startup looking for capital to a family buying a new home. So yeah, this policy had a genuine, tangible impact.
Of course, a policy like that is only as strong as the pipes it flows through, right? So let's take a look under the hood at the health of the banking sector itself. This is really the heart of India's whole financial machine.
And what you're seeing here, this is a truly incredible turnaround story. Just think about it. Back in March 2018, a staggering 11.2% of all bank loans were bad loans, what the experts call non-performing assets, or NPAs. Now fast forward to September 2025, and that number has absolutely cratered, down to just 2.2%. That's the lowest it's been in decades. Just a massive cleanup.
And look, this is way more than just some numbers on a spreadsheet. What this really means is that India's banks are healthier and stronger than they have been in a very, very long time. It frees them up. They're not bogged down by old problems, so they can get back to their main job, lending money and fueling the economy.
And the good news doesn't stop there. It's not just about cleaning up old messes. Their capital ratio, which is kind of like their financial safety cushion, is a super strong 17.2%. Profits are looking good and getting better. The slippage ratio, that's a fancy term for the rate at which new loans are going bad, is holding steady at a really low level. And get this, the recovery rate has doubled since 2018. They're literally twice as effective at getting their money back. It's just a picture of a really resilient system.
Okay, so the banks are in great shape, but that's only one part of the financial system. There's another huge story unfolding right now, and it's all about how everyday Indians are choosing to save and invest their money.
Just look at this chart. It tells a fascinating story. For a long time, putting money in a bank deposit was the default, right? And it's still the biggest piece of the pie. But look at that other slice, a huge and growing chunk of our savings. We're talking almost a quarter of it is now going into the stock market, into equities and mutual funds. It's a massive shift.
And this isn't some abstract economic trend. This is personal. You've probably seen it yourself, right? With your friends, your family. People are thinking differently about how to build wealth. It's about more than just saving. It's about actively investing and participating in the markets.
So all this new energy has made India's stock markets incredibly dynamic. We're a world leader in IPOs with over 21 crore DMAT accounts. That's a huge number of investors. So the equity side is booming. But then you have the other side of the coin, the corporate bond market. Now this is super important. It's how big companies are supposed to raise money for huge long-term projects. But right now, it's pretty quiet. It's the next big thing that needs to be developed, and it's a critical piece of the puzzle.
So that brings us to the big picture. What's the end game here? It's all about building a financial system that's not just for today, but one that can actually power India's massive ambitions for the future.
And that future has a name, Viksit Bharat. It's the national goal, the big mission, to become a developed economy by the year 2047. But let's be real, you cannot achieve a goal that huge without a financial system that's up to the task. It needs to be stable for sure, but it also has to be smart, sophisticated, and absolutely geared for growth.
So how do we get there? A whole new regulatory blueprint is being drawn up. The core idea is pretty smart. Instead of regulating a company based on its label, like bank or fintech, you regulate it based on what it actually does. This levels the playing field, makes sure the rules match the real-world risk, and, crucially, it helps deepen those channels for long-term money, like that corporate bond market we were just talking about.
And it seems like this new approach is getting noticed. I mean, it's not just us saying it. In 2025, the heavy hitters, the IMF and the World Bank, both gave India's financial system a major nod of approval. They specifically pointed out how much more resilient and inclusive it's becoming.
Which brings us to the final and maybe the most important question. The road to 2047, it's like running a marathon but at the speed of a sprint. So the big challenge for India's financial policymakers is this. Can they build a system that does two contradictory things at the same time? Can it be a strong, stable shield that protects us from global chaos, while also being the high-octane engine that powers us toward that developed nation goal? It's a huge balancing act, and it's happening right now.